Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you.
Traders, I got your watch list for June 13th. Let's run a quick recap of today's trading session, then dive right into our watch list. The stock market has been experiencing a positive trend, with major equity indexes like the S&P 500 closing higher and reaching new highs. This continued the momentum from the previous week, marking the fourth straight winning week for the S&P 500. The global markets also performed well, with Japanese and European equities leading the gains. This solid performance has contributed to the year-to-date rally for international developed market stocks. The technology, communication services, and consumer discretionary sectors have been leading the way, continuing the recent trend of outperformance from growth-style investments. These sectors have benefited from favorable economic conditions, technological advancements, and changing consumer preferences. While the stock market has been on a strong run, there are key factors to watch that could potentially influence its direction. One such factor is the upcoming release of the Consumer Price Index (CPI) report. The CPI report, scheduled for Tuesday, will provide insights into inflation trends and could have a significant impact on market sentiment. Investors will be closely monitoring the CPI readings as they seek clues about the future direction of interest rates in the Federal Reserve's monetary policy. The recent market rally has been driven by expectations of a potential pause in rate hikes from the Federal Reserve. However, for the Fed to fully end its rate hiking cycle, it will need to see further evidence that inflation is trending sustainably lower. As a result, this week's CPI reading will be crucial in determining whether the market's expectations align with the actual inflation data. Any readings that fall short of expectations could present short-term challenges to the market's momentum. Looking at individual stocks on the watch list, Intel, INTC, is a stock that has attracted significant attention in recent trading sessions. The company's shares soared after it released data showcasing the superior performance of its 4th-gen Intel Xeon processors. The benchmarks and tests demonstrated that Intel's processors outperform the competition in key workloads such as AI, data analytics, high-performance computing, HPC, and other critical applications. This positive news has raised optimism among investors, who believe that Intel's technological advancements and superior capabilities in AI-related use cases will lead to improved customer experience, revenue growth, and reduced total cost of ownership. The market's reaction to Intel's announcement indicates that investors consider this news meaningful, although it may not fundamentally change their perception of the business. It's worth noting that Intel's shares are generally not as volatile as the market average, with only 13 moves greater than 5% over the last year. Therefore, today's significant move signals that the market views this development as a positive driver for the company's future prospects. It's important to put Intel's recent performance in context. The stock is up 23.3% since the beginning of the year, but it is still trading 18.8% below its 52-week high of $40.61 reached in July 2022. However, long-term investors who bought Intel shares 5 years ago would still be looking at a substantial return, with their investment worth $601.06 for every $1,000 invested. Institutional ownership is another factor worth considering when evaluating a stock. In the case of Intel, 63% of the company is owned by institutions, indicating that their trading actions can significantly impact the stock's price. Institutional investors have access to substantial amounts of capital, and their involvement in a company is often seen as a desirable trait, as it implies confidence in the stock's potential. When analyzing Intel's ownership data, it becomes apparent that no single individual has a majority interest in the company. The top 25 shareholders collectively own less than 50% of the share register. The largest shareholder is the Vanguard Group, Inc., with an 8.9% stake in the company. Following closely behind are BlackRock, Inc. and State Street Global Advisors, Inc., which own 8.0% and 4.3% of the shares outstanding, respectively. This distribution of ownership suggests that decision-making power is not concentrated in the hands of a few individuals or entities. Moving on to Boeing, BA, the aerospace and defense giant, is another stock that has recently caught the attention of traders. Boeing's stock was added to Swing Trader on Thursday, and on Monday, it entered a buy zone, indicating potential upside. One key factor contributing to the positive sentiment around Boeing is the company's improved financial performance. Boeing reported narrower losses and improving sales in the past 2 quarters, signaling a positive trajectory for the business. Its commercial unit has booked solid revenue gains this year, driven by the return of travel demand and volume to pre-pandemic levels. Despite recent production delays for its 737 MAX and 787 Dreamliner aircraft, analysts do not anticipate these setbacks to have a significant impact on Boeing's delivery schedule. The company has plans to address the issues and ramp up production to overcome challenges such as fuselage fitting problems with the 737 MAX. Analysts from JP Morgan have maintained an overweight rating on BA stock, with a price target of $225, emphasizing their confidence in the company's ability to overcome these obstacles. Boeing's performance is also closely tied to industry events and developments. The upcoming Paris Air Show, scheduled from June 19 to June 25, is a significant event for the aerospace and defense sectors. As the world's largest air show, the Paris Air Show is a crucial event for companies like Boeing to showcase their latest innovations and secure potential deals and partnerships. It serves as a platform for major announcements, product launches, and networking opportunities within the industry. The event attracts key players from the aerospace sector, including airlines, defense organizations, suppliers, and investors. For Boeing, the Paris Air Show presents an opportunity to highlight its cutting-edge aircraft, such as the 737 MAX, 787 Dreamliner, and the new 777X. The company aims to demonstrate its commitment to innovation, safety, and environmental sustainability. Boeing's presence at the air show is significant not only for securing new orders but also for strengthening relationships with existing customers and suppliers. Furthermore, Boeing's performance is influenced by broader factors such as geopolitical developments, trade policies, and global economic trends. As an international aerospace and defense company, Boeing's operations are subject to various geopolitical considerations, including trade disputes, regulatory changes, and government contracts. Changes in international relations, such as trade agreements or tensions between countries, can impact Boeing's business prospects and stock performance. Another aspect to consider is the company's competitive landscape. Boeing operates in a highly competitive industry, with rivals like Airbus vying for market share. The ongoing competition between these two major aircraft manufacturers drives innovation and customer-focused solutions. Boeing's ability to maintain its market position, win new orders, and deliver aircraft on schedule is crucial to its long-term success. Additionally, investors and analysts closely monitor Boeing's financial health and profitability. Factors such as order backlog, revenue growth, profit margins, and cash flow generation play a significant role in evaluating the company's financial performance. Changes in these metrics can have a substantial impact on Boeing's stock price and investor sentiment. In conclusion, both Intel and Boeing have recently attracted attention in the stock market. Intel's impressive performance with its fourth-gen Intel Xeon processors has generated optimism among investors, while Boeing's improved financials and upcoming events like the Paris Air Show have boosted confidence in the company. However, it's essential to note that stock performance is influenced by a multitude of factors, including company-specific developments, industry trends, competitive dynamics, geopolitical events, and overall market conditions. Monitoring these factors and conducting thorough analysis can help investors make informed decisions when considering stocks like Intel and Boeing. As we reflect on the trading session, it's evident that the market remains positive, with major equity indexes closing higher and global markets showing gains. The upcoming CPI report will play a crucial role in shaping market expectations, especially in relation to the Federal Reserve's rate hikes. Traders and investors should remain vigilant and anticipate some fluctuations as the market progresses. By keeping a close eye on the developments in stocks like Intel and Boeing, investors can identify potential opportunities for growth and make informed decisions. Overall, the market's recent performance and the positive phase it is experiencing indicate economic resiliency and an expected end to the Fed's tightening campaign. While uncertainties and potential challenges may arise in the future, the overall sentiment suggests a positive outlook. Thanks for tuning in. Your engagement helps us a bunch to create these time-consuming videos, so be sure to subscribe, like and comment what you're watching tomorrow.